Okay. All right. So first thing first, let's see, like screening cam. So I'm good there. Everybody go out and register on the marketinstitution.com. That way we can build up that database. And we're getting a nice little bounce. Okay, so prep screen. Officially starting. Good morning, everybody. This is live trading with me, Jeff. Okay, October 23rd, 2023. Information contained in this presentation should not be construed as a recommendation or an offer to buy or sell any security or financial instrument. Additionally, information contained in this presentation does not imply the suitability of any investment strategy. We are not licensed brokers or investment advisors. All attendees to the presentation and purchasers of our content are encouraged to speak with a licensed representative of their choice regarding the appropriateness of investing, trading, or of any investment in any trading strategy. We're using real-time market data and we'll be executing trades in a simulated account, okay, during presentations. No offer on our part with respect to the sale or purchase of any security is intended or implied, and nothing contained in here should be construed as to take a position in the market. The intent of this information is for instructional purposes only, and it's instructional and education purposes only. Any fair use of third-party trademarks does not apply in affiliation or a sponsorship. All trading involves high risk. Past performance is not indicative of future results. We make no promises, guarantees, warranties, suggesting that any information shared will result in a profit and not in a loss. And you agree not to hold us legally or financially responsible for any reason. Okay, here I have the prep screen zones. Remember, the prep screen zones are a little bit different than the zones that may be outside the regular trading hours, the regular session, okay? So make sure you have these marked. Some of them are a little farther away, but we will have some trading ones in between, okay, as we do each day. Nobody can see the screen? Okay, I got screen and cam. Oh, camera. Okay, I have that screen on. Can you see the prep screen? No, it's not. Oh, transition? You guys, I got a transition, okay. Is there a way to automatic transition? Woo, so many buttons over here. I'm not a producer, okay? Producer in trading, but okay, there we go. All right, let me start. I'll just go back a slide here. Basically, opening slide, disclaimer, prep screen. Okay, I'm just going to leave it at this for a moment. I may take my picture off, but every time I change the screen, I have to hit transition. Okay. All right, thanks everybody for being patient with me. Let's get focused on our trading day. I'll just leave it where we have now. I may have to take my picture off or move it around just so I don't cover up anything. So, and then somebody tell me to hit transition. Yeah, all these sessions will be recorded as we go forward. There's going to be a little bit of editing on the front side, and this week, just be patient. We'll make sure that we present all the classes. We'll keep everybody up on top. I'm here to support you. We're still working out some of the financials on the back end from the Elite Trade to make sure everybody gets paid back. And we will have the instructions going out in the email. It is important that everybody goes out to themarketinstitution.com, okay, and register there so we have your email so we can get the timely emails and, of course, the alerts for when get the alerts so when we have the different sessions coming on. Okay? All right. So, getting started. Much attention towards bonds and notes, okay? This morning, as I pull up the prep screen, I want to take a moment to go through and start making you aware of some of these pictures, okay, on the price chart. And we'll keep doing that pre-market prep, okay? Right now, this is the bond market. Remember, as we start off looking at where the three touches of resistance are, okay, I'm in a little larger time frame. Let's drop down to a 60-minute. So as we're watching what is about to unfold, there's just the media is starting to draw attention to bonds, 5-year, 10-year, 30-year notes, bonds and notes. Okay, all the three touches are on the left and we got low pivot on the right, okay? Now, what this does is that market tends to rally pretty strong, making that first impulse wave after we have created a fresh accumulation of orders, okay? Something big is about to change, okay? But currently, the equity indexes are back below the 200 moving average. As we bring back up our prep screen here, I want to make sure that, well, I have to re-edit that. The overnight range is now wide, okay? It is not small. It was small when I first started. 10-year yields and the U.S. dollar continue to move higher, okay? Yesterday, when we were starting out the session, we were saying, wow, that looked like pretty far away that the dollar had to move up, okay? Throughout the evening session, okay, the dollar kept cranking, okay? So the dollar moving up is a negative impact on the equity indexes. And then furthermore, I went out to the 10-year yields, and it is still smoking to the upside. But, okay, notice each time it makes that peak, okay, and you can take a trend line, kind of go right across, okay, is each time it made that new peak, we had the sell-off, okay? So this morning, as we're anticipating, maybe there'll be a drop on the 10-year yield. This is a 2-hour chart, okay? So maybe there'll be a drop on the 10-year yield, which is going to give us that rally, okay? So what we're going to be doing now is extracting information from the charts, seeing where the demand zones are or the buy territories for the larger time frame, okay? We expect the markets to be volatile, mainly because of the Jewish holiday all week this week, okay? And some of the best trading we're going to have is, based on our strategies, is where the banks and institutions have unfilled orders and where they're processing orders for the morning session between 8 a.m. and 11 a.m. After this time frame, okay, you can start going back to some of the conventional ways. A new thing that we're doing on the prep screen, and you guys are going to have to take a quick snapshot of this. Maybe somebody can snapshot it and put it in the Discord room. Okay, see, these are some that I'm watching for as far as opportunities to make trades. So we're going to have some trade opportunities as we start going forward. Okay, a little bit more detail on this. And then, of course, I'm going to keep posting the charts on here as well. Okay. Now, this morning I only got one of the screens up, so we're going to be doing a little bit of research on that and creating the second one with the more of the FX markets and, of course, the agricultures and metals. Okay. So let's bring back the screen. So the daily ATR is 55, looking lower left-hand corner. Daily ATR is 55 on the S&P, okay? So we're gathering information at this point. The other piece of information is that price is now below the 200 simple moving average, okay? Now this could be a big red bar or it could be a big tail back to the upside, okay? We do have economic reports coming out. Let's go back up to the screen. JOLTS at 10 a.m. and Fed's already been speaking. So as the Fed started speaking this morning, the market started dropping. Yesterday, TradeStation halted, or not halted, TradeStation changed the intraday margin rate an hour before Powell was supposed to speak at 1 o'clock, okay? So tomorrow we have 1, 2, 3, 4, 5 times the Fed's coming out. They're already bracing for a big impact. What will that impact be, okay? In what direction will they go? Well, the markets, as we have been watching the 10-year yields keep going up, and the dollar keeps going up, this is the perfect storm for more inflation, okay? Now, keep in mind, the next FOMC meeting is the one of the last FOMC meetings before we start that last section going into the end of the year. Now, if you have your Stock Traders Almanac, it's time that you start studying the activity before an election year, okay? And the reason I'm getting into that is that activity before election year is that the Fed rarely increases rates during the last quarter, okay? And that's a political move from the president, basically they don't increase the interest rates during that time, so it makes the existing president look good. It's a political move, okay? So we have to understand that rate increase may come in out of the norm. It may come up abruptly. But prior to the next FOMC meeting, okay, we should, and we're watching the dollar and the bonds keep climbing, they're going to have to do something, okay? But the closer we get to Thanksgiving and Christmas time and so on and so forth, the holiday season, Christian holidays, okay, we have to be prepared that once they get this rate increase done, okay, that the following one is not going to be going into the end of the year. We have, 2 more meetings? They happen every 6 weeks, okay? So the last meeting of the year, probably very low impact that we will have a rate increase going into the new year, okay? Gosh, talking about the new year already. Ooh, don't like it. So giving you a little foundation of that, we have to anticipate from the daily chart that we need price to continue down and create a reversal pattern. If you take the Dow Jones Industrial Index and go way back into the, back 100 years, so to speak, okay, you can see that every downtrend had to have a reversal pattern to go back up, especially the ones between September and November. Those reversal patterns are very predictable, okay? This is where you come up with a lot of the sayings. So the Stock Traders Almanac is going to be instrumental in this. Referring to the daily ATR, 55. Globex range is now at 44. Okay? Globex range is in that 70 to 100% of the daily ATR. Okay? Now, yeah, down here, that number right there. Sorry, and I can make it bigger too. Okay. So, and we're referring to the S&P because it's kind of the bellwether. Okay. So we have a zone, and we have a buy territory. But as you go back and you start looking at, when we have reversal patterns for the beginning of a long-term uptrend, okay, and the market gets in control right here, you'll have a nice reversal pattern, okay? That reversal pattern is pretty consistent, okay, when we're in front of a longer-term trend, okay? The correction move that we're still seeing is, price is pulling back, okay? A little easier to do on the Dow the Dow Industrial Average when you go back and have your first date set at 1901. You can do a lot of research on that, okay? I'll do some of that later, maybe in the Mastering the Charts review and recap as we put that together. But for today's session, things are looking a little bit more on the bearish side at this time, okay? Because the Globex range is now wide, okay, 44 points, we have to expect the bear trap scenario, okay? So I want to make sure that my zone is in the right place, okay? It was during the regular trading hours, okay? So this price breaking lower, we're already an outside day, okay? Price breaking lower, we got 42.87, 42.76. That is the zone, okay? Yeah, it's a little wider zone, so the reaction of anything dropping in, the bull trap and the bear trap is ready to go, okay? So make sure, and since everything looks really bearish, we want to get a little confirmation on this. Things will be volatile at the open. The volume is still pretty light, okay? We got 1, 2, 3, 4, 5, so we got 7 Dow stocks negative and nothing positive. So 7 times 2 would be 14. Okay, number. Cash equals negative 14. Futures are trading at negative 28. So now I want you to visualize the action that will take place on all the equity indexes. Price drops if we have the overnight range is wide into a demand zone where we have the bear trap. Okay, not TARP. So many things to do, so many bells and whistles. Gee whiz. And then I'm trying to watch the chat too. Gotta go feed the goats. Good to see you in here, Scott. Glad to have you. All right, so visualizing price dropping into demand zone. Okay, we are looking for the bear trap this morning because of the Globex range being wide, okay? And I want to make these very specific because as we start growing this content, there's going to be a couple of classes that I'm already outlining that are going to be talking about the pre-market routine and why we look at everything. So when we get into the live trading room, I'm not teaching so much, and we're going to be preparing to trade, okay? So if you want to know about these things, just stay tuned. There's a lot more content that I've been working on that's going to be coming out, okay? Now, price, watch for where price opens, okay? If price opens inside the prior session's range, then we're going to look for that gap fill, okay? So scenario number one, the open price drops in bear trap, and we get a rally back up. Okay, fill the gap, and we got a zone up there, and we're visualizing this. 3 trades. Okay. Scenario number 2 is that price goes up, fills the gap. If we open inside the prior session's high, I'll lean more towards price filling the gap before going into the bear trap. Okay. So the art of drawing the picture perfect past trade setups, okay, is that you see the picture very clearly and you start recognizing where and what the right side of the chart should look like, okay? I do want to point out as well, we have a small time frame resistance right in this area, and we have that little bump right on top of that, right around the bill color, okay? But up on top as well, just a little bit higher, there may be some resistance. It's a little wider area where additional sellers came in, okay? So we use support and resistance as a reference point to identify where things are at, okay? All right, NASDAQ. NASDAQ Globex range. Now, we're at 236, which is a daily ATR, okay? And right now, the NASDAQ is inside the prior day's trading range. It has not broken, so it's an inside day, okay? So with the inside day, we are expecting that gap fill, okay? So a smaller time frame, we're going to be looking for leg base group of candles in here, and I'm just going to drop down to a small time frame. I'll put the little blue dots on there. That one's already back up in resistance. I want something right around there. So 8, 7, there we go. And let's go back out to the 20-minute. Okay, so expecting the gap fill. If you get in, make sure that you're kind of looking for that zone entry on that gap fill. Okay, because the settle price and prior sessions close or settlement, okay, and gap fill are inside that zone. So taking that proximal line entry may be a little more elevated risk. The other thing I want to point out is if the market does start to go lower, that the NASDAQ is potentially there for a breakout to the downside. Okay? So a couple little scenarios right there. The Globex range, as we measure that relative to the daily ATR, we're probably just around that 70% tile. Okay, actually, yeah, we got 10, 20, yeah, we're right around that 70%. Okay, so the bear trap and the bull trap strategy are also in play on that. That's correct. NASDAQ breakout to the downside wouldn't be affected by the, it can be, okay? What I'm guessing at right now, or estimating, is that 3 out of 4 times you're going to bounce off of support and resistance, or 78% of the time price will bounce off that level, okay? So if the NASDAQ breaks the prior session's low going into that support, at the same time the S&P is in the bear trap and we're expecting a bounce, we could probably expect a high probability bounce up on the NQ as well. Great question, Scott. Okay. For the Dow, little different picture. Boy, I'm running out of time. As you will start to see in the schedule, once we start working out a few of the bugs, I am going to do an earlier start time so that I have more time to teach and train with the pre-market routine. Setting up your day, managing expectations on a day-to-day basis based on the chart patterns and stuff, very, very important, okay? Globex range 251, daily ATR is 380, okay? So we're in kind of that middle range. So the Dow is not going to be the one that is going to be kind of the crazier one, okay? It may be just, using support and resistance. So main focus right now, S&P and NASDAQ as far as trade opportunities. Russell, larger time frame, the Globex range on the Russell, daily ATR is 29 on the Russell. The Globex range is 19, so we're still kind of in that choppy mode, okay? So not necessarily looking for the bear trap on the Russell, okay? But I will say that the Russell has a prep screen zone down here from a large time frame. So if we should drop down, that would be a great opportunity. Okay, so we got equity indexes. Of course, we now have crude oil. Let's do it back to the 5-minute. Crude oil report comes out tomorrow. Okay, crude oil inventories. Okay, so the open range breakout was back to the upside. We got a little headwinds coming in over here where we have a leg-based group of candles on a 5-minute chart. Okay. This is a leg-based group of candles over here. I don't necessarily would call it a zone. So it'd be kind of a quick trade. Okay. I'm going to change this to MCL. November contract X23. Okay, and I'll be watching for the opportunity to make a trade on that. Now I am more bearish on crude oil based on the larger time frame picture, which I'll describe here in just with one of our picks. Where do we have crude oil? Right here. Okay. So on crude oil, we had a pretty significant drop yesterday, and we have demand down below on this larger time frame. Okay, make sure you go to the left. There's a support area here around 87.72. Make sure that your zones are in the right location. Okay, in the buy territory. Okay, and do your research and find the leg base. What I do here is provide you with the approximate levels, okay? The price coming back up into this range right here, we may find some sellers, and if the market conditions are a little bit rough, we would have the move back down. We'd be looking for buying right around 87.03 down to 86.45. If you are able to take the breakout trade at 82.72, then you would have target 1 and target 2 down below. Let me just kind of highlight the areas. Yeah, please forgive me if I'm, I'm a little scattered right now, just trying to get everything lined up and trading, of course. But all the new toys I have as far as setting up the show and changing things around here. It's really cool things that are coming up. Nat Gas has already made the move. Okay, so we're done with that one. So Nat Gas got a nice move out of that. That was one of the picks, Nat Gas. That was the entry. Got to get these out in the Discord room a little bit earlier or post it on the website. Again, a lot of bells and whistles right now. You will see that on the website where you have access, you click a button to go to live trading room. In that same area, you'll have your access points, and of course the prep screens and stuff will be posted in there. But not yet, it's still in process, okay? So nice little trade on that. Just busy this morning, wasn't able to get into that one. Gold, big time on gold. We are deep in that buy territory, okay? We are in a daily zone, okay, which is 1865 to 1823, okay? What we want to look for now on gold is if it is going to start to turn and come back out of this range. We have resistance up on top and support, so the area in between, okay, is that dead space. Hey, Bucket List. Yeah, the brief update is Caitlin and I decided to part ways. Okay, she has her own vision and I have mine, and we just weren't meeting eye to eye. Okay, so if you've made any payments and things like that, we will be refunding the payments. It's just going to take us about a week to settle out the accounting and get things going. So there will be instructions coming out either today or tomorrow on how to sign up, register on themarketinstitution.com. Everybody should be going in there and getting registered so that we can build the database of names and emails and things like that, so that we can contact you with the links and everything. Okay? Thanks, Bucket List. All right. Yeah, I don't want to create any more drama around that. It is what it is, and there's some pretty cool stuff coming out. All right. So now that gold is back in the daily zone, okay, you need to look at the picture on the price chart right here and drop down to a small time frame and start looking to see if there's a fresh accumulation of orders being built or manufactured, okay? So right now, we can see that there is a little drop-based drop here, and a potential start right now of, like right in here, resistance, okay? Now, in order to take that breakout trade above the 1845.60, we need to have a new, fresh leg base group of candles form. You can keep going smaller time frames so you can get in there, okay? But make sure you have the proper settings there. Stop loss currently would be about 1838.60. And we're looking for a breakout to the upside, right around that level. Can everybody hear me okay? Okay, good. Yeah, I just got a text from Henry. He might be in the Discord room, can't hear me. There's some people in the Discord room that are asking, how do we get in? Okay. Thank you for taking care of that. I got a great team, great team. All right, so breakout trade, 1845, and we could even add that to prep screen there. Russell, yeah, we have gold right there. But dropping down to the smaller time frame, you can get manage your risk a little bit better. Okay? And I'm going to do that at this moment. Yeah, dropping down to a 3-minute chart. There it is, right there, leg base, leg base. Okay, notice the structure of the buy territory. Okay, we got touches on the left, touches on the right, and low points in the middle. Okay, these often can lead to longer running trends. Okay. The area for the breakout is up above. We are now forming, not yet completed, another leg base group of candles before that potential entry at 1845.60. Okay. So on a small time frame, we could be looking for an entry right around the 1837.5, 1836. Okay. Now I forgot to switch back over to the simulator, so I'm just gonna take a couple of micros. MGC, G23, and 1837.5. And got one, and I'll place my stop loss. I'm gonna give it a little extra wiggle room. Just down to that little nugget, about 1835, so about 2 points there, okay? Gold likes to get crazy sometimes when it gets down to the zones. I'm also going to place the order as larger time frame. Boy, we want to take the risk. Actually, where markets are open now, 1842.30, got a small breakout. You could probably drop down to a 500 tick for that. You want to be a little more conservative, then wait for the breakout back above. Okay, a couple different places there. Stop loss, if you take the early entry, it'd be 1838.70. Okay. Okay, so 42. I'll just set that one up. By market one.
Order filled.
And stop loss 1838.80. Okay. Yeah, so basically we had a daily chart looking for the turn, okay? Oh, thanks for that, Liz. Trend open 2, selling coming in. Let's get back to the S&P. And bank index shooting down. VIX index. Okay, so things are mixed. As we use the banking index as an odds enhancer, we see that the initial move on the bank index, 24 banks, regional and national banks, that this index is measuring whether they're buying or selling. Okay, if they're below the moving average, more or less bearish on the banking. The VIX below is actually bullish. Okay, so we got mixed signals right at the open here as to what we're going to do. Back to the chart here, S&P is outside the prior day's trading range. Okay, NASDAQ is still inside, and we're still looking for that gap fill. Dow inside the prior day's trading range, looking for that gap fill. We do have a resistance right up in this area. And let's look right in this range here as well, because there's a smaller resistance. I want to find if there's a leg base group of candles in there. 15, yeah, there is right before. I thank everybody for being patient with me today. I'm a little all over the place, but it's just going to get better from here. Dow inside the prior day's trading range, an inside day. No breakout trades on inside days on those products. Okay, zone entries only. Okay, Globex range is kind of in the middle of that. Because we opened inside the prior day's trading range, we're looking for that move up to fill the gap. Okay, gap fill happens high percentage of the time. All right, Russell. Little choppy, but when the Russell's quiet, you just have to be a little bit cautious, okay? I want to come back up here and look around. I don't have really any great support right there, but what stood out on the chart is there's a little leg base group of candles right there, okay? Now sometimes I'll mark the leg base group of candles, but it is your job to follow through and make sure that that zone is in the, or that leg base group of candles is in the right place for a trade, or if it is for, well, if it's an entry to take a trade, or if it's a place to take a profit. Both of them are taking trades, I get it, okay, but some of the leg base group of candles are for when I'm gonna get in and make a move, okay? Other ones are gonna be where I'm gonna look to take a profit. Okay. Crude oil still working. That gas passed. Oh, doing okay on gold. Wow, now I should have done a full contract, huh? All right, keep in mind I just took 1 micro on that, okay? Coming in, yes, we went to a smaller time frame because we recognized that we were in a large time frame demand zone. Okay, which gives the high probability. After a strong move down, demand zone, gee, we could probably put some Fibonacci measurements on that to project down at this level as well. Okay, there were a couple of zones. I currently have about $37 worth of risk on that 1 micro that we're in. Potential upside is coming all the way back up to about 1921 on the more conservative, 1916, 1921 would be that range, using these pivot lows as my potential target. Might have to be in it a day or two, but you never know with the gold. If the dollar is starting to see that there is a little supply there, and what we're looking for is a big, there we go. We want to see that big change in the and potential drop on the yields, which are going to give the equity indexes a big move back to the upside, okay, and gold too, okay? So they're trying right now to defend that 200 moving average, okay? We'll see if that plays out. If towards the end of the session, the S&P is going to close below the 200, you have to expect more of a bigger sell-off potential, okay? Anybody participate in gold? Okay. Now, if gold is bouncing, okay, we talked about a couple of the other ones. I was just starting to do my charting on the FX markets, okay? Aussie dollar just coming out of a large time frame zone, okay? British pound is there. Now, if the yield starts coming off this high, okay, we're going to see the FX markets and gold and the equity indexes move up, okay? All right, thanks, Janet. So, 5-year Remember this price pattern, we have all the touches over on the left and we have a low pivot on the right. Okay, so we're really watching the bonds, treasuries for this big impulse wave. Okay. So here again, great picture. 3 touches over on the left, low pivot on the right. So let me just draw this out briefly. And we also have the speed bump here, okay? So this is what the picture is that I'm looking at, and this is why I'm so, and there's another area right here to get into an early on a smaller time frame, might be able to get that breakout. Same picture being developed down here to get a strong move, pull back, and keep on going, okay? So the picture and the way that I visualize the right side of the chart. First, the left side, as we have the downtrend, and we can see that price has been doing something like this, okay? Now, using the resistance, where we qualify a resistance by minimum 3 touches, okay? We are now anticipating that this move up, and I want to make this a little bit more picture. I was having a really good conversation last night with my buddy Summit. Some of you remember Summit. And we were talking about, he wanted to know a little more details and stuff like that. And, I was listening to his the way he was talking, and he was describing the chart so perfectly, but he didn't have the math or the rules behind it or the statistics to back up and help with the decision process, okay? So with this pattern and structure, okay, we're looking for this big impulse wave. Back up to the speed bump area. Then we're looking for the pullback. Now, right now, we have to find someplace in this impulse wave where we're going to find a demand zone being created somewhere. So it might be even lower as it is starting to be formed on a smaller time frame. Very important as you find picture perfect past trade setups, okay, is to document the structure inside. This is what allows you to start training the eyes to see the variations between these the buy territories and the sell territories, and visualize the right side of the chart. Okay. S&P still moving up. NASDAQ, Dow, all kind of quiet. Russell, I was hoping you'd go into the zone first. Okay, the trend went high and now is back in accumulation, and the upticks over downticks are kind of right on the zero line. A little more fear in the market still, but the advancing issues over declining issues are starting to make a turn. Okay, so let's check the S&P futures. I have 1, 2, 3, 4 Dow stocks that are positive over 94 cents and 4 that are negative. Cash equals 0. So S&P futures are still oversold by 11 points. If we add 11 points to the current price, where's that going to put us? So using some fundamental information, what price point would that put the S&P if cash and futures balanced out? So that put us right around the 43.23-ish, which is right near that gap fill. Okay? So we have some fundamental information matching up with the technical. And we see that S&P futures are oversold by about 11 points. So when we add that to, okay, it brings us right to a zone. Now, taking short trades or long trades when cash and futures are balanced is elevated risk. okay? If price arrives in that supply zone earlier than the quarter hour, and now we're just coming up on an economic report, okay, that we have coming out at JOLTS at 10 a.m. Eastern, okay? So that report comes out, price up in that supply, filled the gap, okay? We would then look for an opportunity to take a short-term pullback, okay? Now, if price arrives in that zone earlier than the quarter hour, top, quarter, bottom, three-quarter, okay? If it arrives early, meaning 4 or 5 minutes early, okay, because it's starting to get a pretty good move now. If it arrives there earlier than 10 a.m., okay, then we'll anticipate that it's just a small counter trend trade and the price is going to go through that zone. If it arrives on time, arrival on time, okay, 10 o'clock or within 3 minutes after the 10 o'clock, then it'll be a great opportunity to take a trade short, okay? So we have that window of time, but especially between 8 a.m. and 11 a.m. where price arrives in these zones, okay? All right, gold still kind of hanging out, still positive. Gas. Oh, did anybody get the zone on oil? $89.47, $89.75. I'll give it a couple more minutes just to settle out the morning open. Then I'll come back in and get a contract. Okay, so some of the other trade opportunities, yeah, gold was the one, we did take that one, so let's color the background. When I change the color of the background, it means I participated in the trade, okay? Or it can be on simulator or it can be live, okay? But I want to show the difference when we post these, that the ones that get activated, okay? Anytime that you're looking to see if somebody is, you want to learn or be educated from that person, make sure that they're documenting live trades. Anybody that keeps coming in and saying, oh, did you take that one? Did you get that one? Is not a trader. Okay. All right. 5-year notes. Let's and a 10-year. I want to get a trade set up on those. But we're on a 60-minute chart for the big picture, and let's drop down to 20-minute. So what we expect is taking the breakout trade on this is elevated risk, okay? And why is it elevated risk? Because this chart pattern that I'm drawing out, as we drew earlier, often has a little speed bump over here. So what we want to see and participate in is wait for price to break out. And very often when the touches are on the left, low pivot on the right, is that we see that breakout, pull back, then we want to get in, okay? Speed bump over here, 3 touches on the left, low pivot on the right. This is how the price pattern, when you start studying hundreds of picture perfect past trade setups. So when we are looking to participate in this one, is I will take a breakout trade after it breaks out and pulls back, okay? Now the risk I have is it keeps on going, but very rarely does it keep on going if I have a speed bump. Need to test the speed bump, pull back, and then you can enter after the pullback below that breakout point at this 105, okay? Okay, so we have NQ breakout, 15,064-ish, more to the upside. We have small time frame on the 10-year, which we're expecting pretty much the same thing. Okay, big picture, and then we have a smaller picture down here that we're going to investigate. We do that by changing the time frame. After you change the time frame back and forth a few times, you start to, you start to get a good feel for what time frames that you'll drop down to get. First, you train the eyes to see the patterns. Once you have the pattern recognition, you're able to see the fractal parts of this. Okay? Again, speed bump. The difference, if there's a pocket of points, then what we would be looking for here would be that there is a big candle right here, okay? So if we had a big drop in price, we would say, hey, that red candle dropping in, there's nothing in the way. But when we have that consolidation just above a resistance area, yes, Scott, I do expect bonds on the bigger time frames to start. Now, what we're seeing on these small time frames is that manufacturing of a fresh accumulation of orders as they're coming in. Okay. Now, we also want to point out that bonds, notes, are at least over 10-year lows. Okay, yeah, and the yield just hit the highest in 16 years, Chris. Okay, so the yield at 16-year highs, bonds and notes are at 10-year lows. Okay, I mean 10's a good ballpark, but yeah, it's been a long time. So they started the buzzwords in the on the news and the media, and one of the things that we pointed out on our prep screen. There's a lot of attention towards bonds and notes as they talk about it, okay? Now, interest rates going up is going to send the bonds and notes back down, okay, until it doesn't happen, and then we're going to see a change in the markets, okay? So pay particularly close attention on the big time frames. These can be some long-lasting trades. Overnight margin rate is pretty small. They do have micros on these. So get on some of these, get comfortable staying in a trade longer term. Practice with a micro and manage your risk, okay? Remember, you can always take a profit when it feels good. S&P, slowly, we're right at the 10 o'clock, okay? So as price is coming back up to look at the gap fills on the, NASDAQ hit nicely. Okay, but it came into it hit earlier than the 10 o'clock, didn't it? Okay, so it's just a short-term pullback. We'll expect price to go deeper into the zone. Okay. Wow, okay, and nice pullback on that. Let's get ready for the Russell. I'm going to wait for a confirmation.
Order filled.
Dang it, stopped out on gold. But I do have that lower zone that we found. That trade is still set up. With that news, we saw the yields shooting up. And we see the dollar continuing to move up. Okay, so a negative impact. Okay. CL, thanks for that.
Order filled.
And looks like I got back into gold. Remember, we had a small time frame on that, and I took a loss of $46 on a closed P&L, and I have right now about $25 more risk on that trade from my second entry. Okay. Now, the risk is elevated because the bonds and the dollar is still moving up, okay? S&P, nice pullback. Banks are still below the moving average, and fear is starting to come into the market as a one-day volatility index, okay? I'm kind of using the moving average as kind of a fence line, so to speak, okay? When we have good trading conditions for bearish markets, okay, the one-day volatility index is above the fence line and the BKX below, okay? BKX above and one-day volatility index below, good for moves to the downside. Right now we're kind of half and half, okay? We had 2 out of the 4 indexes open up inside the prior day's trading range. So on the S&P and Dow, on the NASDAQ, on the Dow, we're not looking to take trades on those until a little bit later in the session, okay? That's when things should come back down to where we need them to be. The bear trap is still in play right now due to the Globex range. So as price is dropping on the S&P, we're back below the 200 simple moving average. Traders are going to start to bail on this, okay? We're looking to see if futures are oversold relative to cash. We have 2 Dow stocks up and 10, 11 down, okay, 20, yeah, so futures are, S&P futures are about 10 points oversold relative to cash on this drop. This drop does not imply selling, okay? The fast drop like that implies that nobody is buying. So price dropping down to find the buyers, this is a big key piece of information, okay? Still taking a little heat on gold. And yeah, the treasuries drop back down, okay? So we're still waiting for a fresh accumulation of orders. And we'll need one on a small time frame in order to splice into that. All right, let's see, wheat. Okay, since we have support and resistance, I know I'm all over the place here. I wasn't as organized as I wanted to be, but it's our maiden voyage, which was kind of earlier than we anticipated, but all good. Thank you, everybody, for being patient. So since we have debt spaces up here, taking short trades or zone entries on this, okay, can be elevated risk. You can take little hit and runs off of those, okay, but understanding the territory you're trading in is, oh gee, hi. Oh, order field is louder? I'll get closer to the mic. Yeah, thanks for pointing those things out. The team is watching the comments, and if you want to make any suggestions, you can do them in the general chat in the in here, or you can put it in the Discord room, because the team is also monitoring that to make sure everybody gets in fine. Okay, soybean meal has had a pretty big move to the downside, and it is also, see on a 60-minute chart, yeah, gold, second gold triggered. And I have, but the dollar and the bonds are still going up. So I'm in the right area, but I'm giving it minimal risk as we start to make a potential turn. Where was I at? Okay, soybean meal, okay? Now, the pattern that we've been describing for a very strong impulse wave to come in is, you can see how it's you got this little area like this, and you know, prices come down like that. We almost got like a triangle forming right in here, okay? So when I see that pattern at the end of a downtrend, I'm looking for a fresh accumulation of orders. But I want to understand the personality, that the three touches are on the left and the low pivot point is on the right. What does that really mean for me? Okay, well, often we get that breakout. There we go. Oh, this is going to be a good one. And soybean meal is kind of quiet. Okay, so we have our three touches. Okay, a tick chart may give you a nicer way to look at the price charts. Okay, for soybean meal, I'm going to participate in this trade here. So
Order filled.
we got a nice pocket of points. Okay, looking to go long 371.10. We're trading a December contract. So SMZ23. 371.10. I'll get into that. My stop loss is going to be at 369.5. And immediate target right up in here. Okay. Now price already hit 3 times, popped up, came back down. So I'm looking for that breakout. And we have a good example of a pocket of points. To boot.
Order filled.
Oh, I want to get rid of that. Okay. Also, I want you to note it's had a pretty significant down move. Okay. And you can probably see that a little more easier on the larger time frame. Okay, so the sell territory is way back up in this area. This is just we just have to sit through the noise and the initial risk until we can adjust our stop loss. Okay, but that one is in play. 69.40. Okay. So coming back out, right click, copy. Okay, so that one we're in. Trade is working. Underwater a little bit. Okay, have a little more risk on that because I'm trading the regular contract. Okay. All right, let's come back out to S&P. Woo, dang it. S&P's in the bear trap. I might be able to adjust that. Let's see, mic, video capture device. Yeah, we desktop audio. Maybe we can watch that, Brian, when we're, which one of the audio mixers do I need to turn down? Either it's the mic or the, see, the mic is what I'm using right now. The video capture device or the desktop audio. Let's turn the desktop audio down. I'll reduce it by half. Let me, and then we'll see how that works. Okay. Yeah, there's a lot of ways. Ellie, I'm just getting trying to get comfortable with all the See, I have this whole studio thing over here that just kind of sharing with you that, has all the different things where we can switch to camera, we can share a screen, we can share a screen and camera, starting screen. I mean, it's quite a production that the folks have put together for me, and and I missed the bear trap. Anybody get the bear trap on that? Thanks, Brian. Desktop audio. Yeah, that's one I did reduce. And the other ones are maxed out. Thanks for the suggestion, Ellie. Anybody get the bear trap? Okay. It was a beautiful entry. I just was a little distracted here. As we talked about on the NQ, we're getting a nice bounce off of that support. And I went back into gold here.
Order filled.
Just getting in random. Oh, yeah, that was just a whipsaw on gold. Okay, that's why I got stopped out. Okay, but it's coming back up. I just took the entry again. Just going to have to give it a little more wiggle room while it's settling out. I'll start with the initial 1834.80. And then once we break out and start getting through some of this mess up here, I'll stick with it. Dollar had a good drop, and the yield is still holding on to the highs, okay? Okay, S&P, we did have a nice little zone down here for. See, even though we have a bear trap on the S&P, it was good for a bounce at this point, okay? If you're going to play it to the upside, make sure that on the smaller time frame you're getting that fresh accumulation of orders, okay? Yeah, I'm watching the heating oil over here as well. Coming back up to an old support area. So it looks like heating oil is moving up, back up in, there's a little supply right there, leg base, leg base. High tight base on these, especially when price starts consolidating in the upper quarter of the move up, okay? And you have a shallow retrace, yes, that can often lead to the move continuing to the upside. Okay. Ooh, nat gas on the tick chart. Okay, nat gas may have a breakout. We're still moving back to the upside. Next area back up to resistance. Okay, look for a small pullback or consolidation before price breaks out above that area, going into a supply zone. Okay. Oh. Getting that pullback. I'll still look to get in at the breakout 370.01. Make sure that you have real-time data for those as well. Okay, I am almost stopped out on that one, but it's still a good trade opportunity. Okay, if I am stopped out, then I will re-enter at 371.10 if it chooses to go back up. Right now, again, the yield is moving up, which is causing these to move down. So we're seeing a lot of volatility in the yield and the dollar, okay, which is bringing in some of that bearish sentiment in the marketplace, okay. S&P continuing lower. We have the 88.6, which has already been tested on the daily chart, 42.75. And the next one below would be that 42.64, which puts us right down into that prep screen zone. Bear traps are generally good for a bounce, not necessarily good for a trend change, okay? Markets are going to start to get more bearish sentiment here the longer that we are below that 200 moving average, okay? We got that bounce, okay, got a prep screen zone. Next area for a long attempt would be at 42.61, 42.45 on the S&P. NASDAQ continuing lower. Let's observe the stocks. We just passed the quarter hour, so nobody was in a zone. Dow prep screen zone. So for this week, all of you are going to have access to the second session, which is the Mastering the Charts review and recap for today and tomorrow, okay, as we're getting all the bugs worked out, okay, and getting things set up. So you'll be getting another Zoom link, not a Zoom link, YouTube link, okay, via email. So watch your email box. That Mastering the Charts session starts about an hour after this one, okay? This one will end in about 15 minutes, and we'll go into doing prep work and getting ready for the Mastering the Charts review and recap. If you've never experienced that, well, part of this session is going back over what we were looking at in the live trading room, a lot of things I've been describing this morning. Then we're going to go into some of the lessons and also a review of the Mastering the Charts foundational structures and patterns, a step-by-step approach. But it's basically a three-parter, okay? But today and tomorrow, everybody will have access to that, okay? Next week, we're going to have to get everybody to subscribe up for that, okay, on the new website. Instructions and all that stuff will be coming out soon, okay, and expect them this week, and expect a few emails from the marketinstitution.com website and from the team, okay? All right, Russell. All right, so Russell is deep into that area, okay? And I just want to take a quick, since everything is dropping, yep, you get the benefit of the tech issues. I like that. I miss you, Scott. It's good to have you here. All right, so I'm going to use some Fibonacci extension levels here. I want to see how far price has extended from this swing, because if it's down to the 224, 2618, 314 extensions, then I'm going to anticipate a V-shaped reversal, okay? So from this this last move down, price has just snugged the 2618. So a bounce back up to the 78.6 retracement would be good, okay? And I want to do a second fib going through the session low. To high, so we see that confluence area. Okay, so we have that. If you're going to take a poke at reversal back out, okay, which is about 9 minutes, it's not in the zone, but we're looking for the reversal time of day. This is your zone right here, okay, using Fibonacci extensions. Now, when we hit the 2618 or 214 off of these two swings, this pattern is often associated with the V-shape reversal, okay? Now, the V-shape reversal has a very steep slope to it, down move, okay? And as we are let's see, as we are looking at the different levels, X, Y, A point, okay, equals a specific Fibonacci retracement, or sorry, extension. And then the B point is often a nice solid retracement back up. Then we have a small pullback, as we talked about earlier, about a 25%, 23.6% retracement, and then the move comes back up. Okay, so visualizing the right side of the chart, right now I'm looking to participate in the A point. Okay, and the A point is posted right down here. It's giving me a small range. Okay. And then we're going to look for that move back up to the B point. Okay. So this is a picture that I'm visualizing based on using the two swings and Fibonacci extensions to the downside, getting that confluence. This is where I'm anticipating the turn and anticipating that move back up about 78% of the move down. And if you look over here, you see that that's a nice little base area. Okay, you can reduce the time frame and find a leg base group of candles right in here, and we're still expecting the gap fill on the Russell. Okay, so on all the equity indexes today, based on our pre-morning stuff, we are expecting a gap fill. Okay, as we can look at the way things are right now, things look pretty ugly. Okay, but if we were to get the gap fill, is that going to be a pretty good move back to the upside? Okay, what would the catalyst be to get that move back to the upside? Okay, well, it would have to be that something comes out about the dollar and the treasury yields dropping, wouldn't it? Okay, so as prices coming back down to demand, I'm on the sidelines. I'm kind of waiting for price to do that. Okay. I don't have a place to go short in any of this yet. And I didn't have a place. Now, that is also a very big part of what we'll talk about in the Mastering the Charts review session, okay, is that sometimes when we start getting these big moves, there's not a really good way to get into it, not taking a breakout, or you have to wait for a price to come back to a zone, okay? So don't get angry or upset and feel like you missed everything, because you did, okay? But realize you missed it, and if you're going to chase it, you're going to donate, okay? It's now time to say, okay, either we're going to have a fresh accumulation of orders, okay? We're expecting a turn. What was it on the NASDAQ? Sorry, which one were we looking at? Russell, wasn't it? Yeah, Russell. So on the Russell, I want to look at what is going on that small time frame right now. Okay, I'm going to drop down to a 2-minute chart. And then furthermore, go to a 1-minute chart. So even on the 1-minute chart, at this moment in time, I do not have a fresh accumulation of orders. Okay, we got 98,000 contracts traded on the Russell. Let's drop down to a 200 tick chart. I mean, I'm getting right into the, I want to see that turn, okay? If this is going to turn and go back up, I want to get in at the lowest turning point, okay? Now, we had the higher time frame Fibonacci levels projecting that area, okay? I still need the right picture in order to engage in the trade. If you want to get in early, turn the time frame down and get the right picture, okay? So we're waiting for data. NASDAQ did come back down. Look at that. We had a larger time frame zone back in the buy territory. We're getting that first bounce. Gold hanging out. Okay, we're starting to see the FX markets turn. I mean, Aussie dollar came back into the zone and popped back out. That would have been a great one if I was a little more organized. Looks like I was almost stopped out. Got right to the tick. Still can be stopped out, but right now I'm still underwater, about 90 bucks on soybean meal. If you're not into this one yet, then just wait for the breakout point. You do have that pocket of points on the smaller time frame, okay? Yeah, we need the dynamics of the market to start to turn, and we're getting towards that end of this session and bottom of the hour. All right, so nat gas we still had as a breakout. Still waiting for the tick data on the Russell. Check the JY. Okay, thank you. Yeah, I didn't get that far in my research this morning. Seems like my data is being a little slow. Got a lot of things running on the chart. Okay, but while we're waiting for data on the Russell, okay, and on the to look at the Japanese yen, I'm going to reflect back over to the 10-year yield, okay, not the notes. 10-year yield, okay, is still moving up. 2-hour chart, let's rock down to 30-minute. We're still on a 30-minute time frame, still showing some bullish candles here. Dollar, okay, dollar's showing a little whipsaw action right here, but has not started a downtrend. Okay, so we need the dollar and the yield to start pulling back in order for the equity indexes to have any legs to go to the upside. As you can see throughout this presentation, there's a lot of checks and balances that we're looking at. Ultimately, we're looking for trade opportunities and where the zones are so I can demonstrate in this live market trade opportunities and where the market prices change based off of supply and demand and the picture that we have on the price charts, okay? We have, oh man, I hate that when it happens, okay? It's like the idea that was there and it just went out, okay? There are times when we don't have a lot of, there we go, we got the Russell tick. Russell's still going lower, so we don't even have a fresh accumulation of orders, okay? So even though that the Russell is at that area we were looking to go long, we still don't have that fresh accumulation of orders being built yet, okay? And we're all the way down to a tick chart to try to find our way into that. Once that fresh accumulation of orders is in play, okay, even on a tick chart, we'll see that earliest turning point, okay? And I'll finish up with the Japanese yen. Holy smokes, did that just happen? Okay, wow. I guess we know where the sellers are, and probably the sellers have been taken out at that range. A reaction candle like this, going back up, you look left, find the leg base group of candles right there and see if it's in the right location. Reactions like this also reveal where the hedge is for these type of products, where they manage that risk. And also I want to point out that when price shot out of there, a fresh accumulation of orders below that support area going into a dead space. Nice recipe for quick moves, okay? So there was a lot of evidence here, okay? Yeah, this will be a good little lesson right here. Smaller time frame, okay? We want to look at, I mean, we all want to have a move like that, okay? Do the happy dance for the whole week, okay? But what was the picture in front of that nice move? And what was the evidence on the left-hand side of the chart? We would get that move, okay? A lot more stuff coming out. I am going to attempt to end this session. Look in your emails for everybody for the next YouTube link for the Mastering the Charts review and recap. That will start in about 1 hour's time, okay? I'll end the session by bringing up the prep screen again, okay? Here we have our levels. I'll get a little more organized on this as we unfold, okay? Here are some of the trades we are looking for the breakout on the Russell. We're going short. Gold and nat gas were a couple of the candidates I was looking at. Nat gas did play out. Gold is still in play. Yeah, I'll bring that right back up, Scott. The soybean meal. Okay. And these are the additional picks. All of these are in the Discord room this morning. By the end of the week, all of these will be listed in the website for those in that area, okay? All right, so I'll bring that back up, Scott. Soybean meal. All right, there's my soybean meal chart. If on a smaller time frame, if you drop it down to a 10 or a 15-minute chart, the next entry will be above 371.10. Right now I'm taking heat on the trade. If I am stopped out, I will look to re-enter 371.10, dropping down the chart to a 20-minute chart to get a visual of that picture. We are building a fresh accumulation of orders. Okay, but I have to manage risk based on what I am willing to risk on the trade, okay? So dropping down even to a 5-minute chart, okay? Looking to take the breakout to the upside, and now looking for a fresh leg base group of candles for that to happen. Okay. All right. I'm going to wrap up this session. I'm going to stop the streaming, and I'll see you guys in about an hour. Look in the Discord room for the link, and also in your email box for the link. Please go out to the Market Institution and get registered, okay, so that we can get your email accurate, okay? Thanks, everybody, for going through our maiden voyage on this. Appreciate all your help and your support. We'll see you in about an hour, okay? Bye now.